General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, so first thing first, top down. Okay, that's that. Monthly is bearish. This is the last month that we closed below. See, next premium array would be this volume imbalance. Let's make it red. Next discount array would be this gap. Alright, so monthly bearish. Let's tag this. Trend below the block. And it's this lot. Boom. Boom, boom, boom. Okay, let's make it this. Premium. Discount. Definitely bearish on the weekly. Looks like we didn't get these equal lows here. Equal lows here too. This is this volume imbalance is going to be important. Let me tag this deal too though, because this is week 4. So this will be week 3. Let me get this bearish weekly volume balance. Discount terms or discount array would be equal lows here. Some equal lows here too. Change this background color. Okay, that works. And lock. So weekly's bearish. Our premium array is weekly volume balance. And our discount array is weekly. Well, that's just a liquidity pool. That's not an array. I wouldn't necessarily. We do have this here. See how this closed. Yeah, I don't like that body. And we came to tag you here. I'll take these as the breaker. Discount weekly breaker. Let's hit this daily. This is last daily low we broke, which was Monday. We never got that Monday high either. Let me tag that because that was just a weird Monday. Let me lock these down too. Okay, so the daily we bearish. If we go above, what do we got us here? That's a nice little fair value gap. Hold up. Oh, it probably went to a lower time frame. That makes sense too for like a push down. I know everybody want to see us run. As soon as we get back up in here, just this range that caused so much PTSD. All right, what do we got down here? It's an interesting start of the month. And unfortunately, how this we're in this candle though. I'll watch this as like a order block potentially. It was the start of the quarter, important reference price. Like it seemed like a lot of orders was put there to fit the order block narrative. It created a swing that break structure and retested. Let's make sure it's not a roll. Hold on, wait. It came down in here, rejected. Oh, this is pretty nice. Hit the H4. H4, we still bearish. Look at how he ran down too. This is more of a liquidity void than just look for fair value gap type things. Let's see what we got on the discount end. Probably nothing worth noting. Usually when we get down here, it's over. Kind of see that's the whole order block where it actually stopped here. capture more of that. So if I get it from this, then it's just this whole candle from this open price. Oh, that makes sense. Yeah, so there's nothing new to add here. We're just bearish. Uh, this is kind of noteworthy though. Yeah, that's it. Bearish. Well, premium B order block. Discount. I'll put order block at equal lows. No need to draw nothing here because it's already enough here. All right, let's see if the H1. Hmm. This is liquidity here, internal range liquidity. That's all I see really. H1 internal range liquidity. Let's see this H1 60. Yeah, we already got that on low mark. Buy side liquidity pool. That one. It's old highs. Here, short blocks. And for like gaps. This breaker could confirm the shift, but it'll line up with this breaker here or that order block there. Alright, now that should be good to go. Alright, so SPX, same process. Monthly is bearish. Monthly premium array. Monthly discount array. kind of on this already for like a monthly liquidity objective. We really could have a reaction here. That's already a huge monthly candle though. All right, write this down. SPX monthly. VI, FEG. Weekly. This one's low. It's a good loud marker. Premium array. Weekly volume balance. Discount array. We kind of got the same breaker. I don't see anything different here. There's no inefficiencies or anything. Block. And I want it on the body. Like that. Click bearish. Balance. Breaker. Daily. Just the last low, which is Monday's low. And might as well get Monday's high on this one too. It's just a crazy Monday. This Monday range is so epic. I'm gonna mark 50%. It really deserves it. Okay, premium array. It's fair value gap. We should do a different color. Matter of fact, what color was it on NASDAQ? That'll let me look at. Let's go here. Oh yeah, those equal lows is a good target. Breaker. Weekly VI. Daily. This is where I got it from. Previous month low. Yeah, because it's not previous week's low, it's week 3 low. That is true. Let's put Monday 50% here. And then I had the color yellow. Boom. Yellow box fixed forever. Now, I don't know, it's easy to do it like that and just type it in for me. Then have a whole bunch of different boxes. Gonna catch on. Watch. We do got those flows here. Similar. But this is kind of the good candle though. We gotta respect this one as far as a daily level. That's a breaker there. Serious daily order block. So we got us a difference here. I wonder if it ends up being this. This is a volume imbalance, but it's already balanced. That's an interesting difference though. And then there was like an order block somewhere around here. But we're a lot closer on the SPY. Alright, let me write that down. Daily's bearish. Premium is a daily fair value gap. And then it's a daily bigger order block. The H4. Let me get this week low. This gap is going to be legendary because we still got it. Got back to back FEGs. So purple? Yeah, we ain't got purple yet. Okay, that's a better reference point, H4. Still bearish. Second FEG. And then for the H4 on the NASDAQ, I got it matched the level. It does. Yeah. I'm gonna just put OB from daily. From daily. H4. Yeah, I don't need nothing on the H1. I really don't never really be needing them, the H1 levels. When you have those big ones, it's always like the setup there for the week. And then lately it's been chopping. It ain't that many setups. Let me go over here, fix this because for the H4, let's remove that. This is better. It's back to back. FEGs. Cool. Let's look at the stocks. Previous month's low. Bearish. Here we go. Go. And what level is this? $6.15. What's the crazy number? 480. Mostly bearish. It's volume imbalance. G. Let's go to weekly. Pretty low. Bearish still. Let's see. It's a premium array. Really, it's this gap. That's a volume imbalance. Well, that's the last week's new week opening gap. Damn. This is kind of like order block. Let's see if we disrespecting it though. Hold on. I don't know what that was. Hold on. Control Z. Well, we kind of respecting that, huh? So we can't really discount it yet. It's just the way we, like, I don't even like it as a level. because we should have respected the open price. Over here we had this breaker. Let me do it like this though. The way the labels on it. Go with the daily. Hold on, let me write down weekly. Pair, balance, break blood, daily. Okay, so really, previous day low in this array, it's gonna be the same. Okay, we put the daily opening range gap. Definitely bearish. There was a daily FEG on the other charts, but it's just a lot of stuff going on here. Volume imbalance. Single time premium. Look like here could be like an order block, but I don't like the way it looks. Daily bearish level. Use higher time frame. Let's check out the H4. Okay, we got the second FEG. Well, it's a order block here. It look like it. Shout out to Win Call. $622.61. All right, now go over here. What's that about? $10 down. Free fall. It's not bad. Okay, daily H4. Bearish. G. It's OB. Alright, hold on a second. Alright. See how the H1 PD array matrix is looking. Let me keep the H4 levels. I can mark these little ones and stuff, but you'll see how the market opens. I didn't see Trump do anything too crazy. It's not gonna QQ. Okay. Lock this. Let's go ahead and do the markup first. The difference between this open and this close. Red box. I could have put new week opening gap, but 3 letters is shorter than 4. Definitely not solid liquidity here. Look at all these weekly lows. Or I mean, sell side liquidity. What strike price? No, I'm on caps lock, so just the weekly break the block level. It would actually just be this one candle, cause the way these candles gapped, I'll take it. Green box. It's on the bodies. Cool. Weekly break the block. No, let me see this. No, because this takes this, but this goes here. I kind of feel like if it don't react off this open price, this gap, well, no, this is a balanced price range. This, yeah, it still needs to react off the open price. If it don't, we got liquidity here, low resistance liquidity run. We close below this. That's a sign this breaker block ain't nothing. Okay, hit the daily. Open the range gap. close, open. And below. Mm, yeah, nothing stands out really. Just H4. It's a serious little candle there. This is second FVG. There's some cool little rebalance objectives. Like that. Looks like we breaking through something here. But there is a order block here at 553. Okay. Crazy week. It's not a red too. Let me do the writing. I did the markups too fast. So monthly. And this is a fair value gap. So I'm moving too fast. Weekly bearish. It's volume imbalance and a breaker, just like everything else. Daily. Let's go to the daily. We bearish still. Open range gap. Doing for discount, we gotta use higher time frame. H4. Bearish. Second FG. OB. Okay. We got mark down. I was thinking about this. Just how it looks. But really, it's too close for an objective. It's like $4 away. You gotta get that tomorrow. Objective need to be in that gap or something. Alright, let me get ready to do the chart work part of it. We did all the markup part. Alright, let's do the work. So starting Q2. What is my transformation as a trader this quarter? Which frameworks, identity traits, or decision skills am I upgrading? Trade weekly candle expansions that stay the same performance. We're gonna aim for high probability trades of 2-to-1 risk reward or 3-to-1 risk reward. Framework selection, 22 model OB, fair value gap, fair swing. One shot, one kill. Equity growth plan, the outcome of a single trade does not matter. What matters most is that our equity management align with our monthly projections. Might require 30 pips, but you only achieve 25. You're still on track with projections. Our results are exceptional because they are averaged out throughout an entire trading quarter. Let the market pay you how it will. You are simply trading in line with the North Star as a projection. The actual results will be average. Risk tier, no more than 8% a month of risk allocated. Total capital per month. The weekly risk allocation will be broken down into risk profiles. One shot, one kills, 2%. One shot, one kill conservatives, 1% with a 1% add-on. Day trade, 1%. Bread and butter, 0.5%. Risk management SOPs. If we exceed the weekly risk allocation of 2%, we automatically have to stop and withdraw from trading for the week. If we experience a loss, we deduct it from the weekly risk allocation. If we experience a loss, we mitigate it on the next trade with the remaining weekly risk allocation or wait for the next weekly risk allocation or allowance if the weekly risk allocation is exceeded. The weekly risk allocation of 2% begins Sunday open and has a deadline by Friday close. So we really want to make sure we enforce that. Hold on. Going into this quarter. It's this go time quarter. Put that. Cool. Yep. We're not trying to rush on Sunday open. We're limited with weekly risk. We're not trying to force risk on Friday close. If we respect the risk allocated per week, there's potential gain of 8 to 16% for the month. I'm not spoiled with my risk because I judge my results on a quarterly basis. I will not judge my results on a weekly basis because I'm on track with my North Star projection. As long as I manage my risk, KPI targets 18 to 24% quarterly. Okay. Seasonality. This is the most updated seasonality chart. What I did was I got the midterms. You gotta keep that in mind. Alright, monthly chart, 3-year look back. $2023. Okay. I would like to see this range. Can I draw this as a box too? Current interval only. Current interval only. We unlock this. I lock this as well. This is our 3-year look back. 50%. We do have this fair value gap order block combination here. We're gonna put some text on it. OB plus FG monthly. And just lock this on this. Put a little blue box in the background. Or should I put a little green box? I'll do this. One even better. Little BPR box here. Because it's a lot of stuff just right here. This is the 3-year look back here. Down here we do got some cool stuff. Order block, fair value gap here. Liquidity here. In all reality, with this is just an interesting area. Okay. Got us going to a correction. Investors are staying hopeful. Hope longer distracts on. The more confidence they lose. We will see troops on the ground speed things up. I think we already there. Now they're just not saying nothing. It's not saying nothing. Compression expansion zone mapping. Just left compression. And we expanding down. Don't catch a follow knife. Let it fall. Stick in the wood. And wiggle a little bit before you pick it up. High time frame point anchor assessment. This range right here is our real range. If I do the ICT bodies, because this is anchor and this is anchor. These highs are weak, especially this one. I would say the anchor created at 50% 3-year range hasn't been retested. We will see if they make it down that far. Will it hold true as the last bullish anchor? Distorted price framework alignment. That actually goes here. Hold up, Control C. Yeah, besides that, there really one of those. Yeah, size a week. Alright, let's look at SPX 3-year look back. 2026, 2023. Then lock this. Get this range, just the candle bodies. That's a weak high too, even though it looks good. Funny enough, that's a weak low. This monthly up candle. You also gotta think this has to be like a huge liquidity pool, being that it was the last anchor. Everybody still got buys from down there. Ooh, man, good job, good job. Let's get the link. Note the anchor point low is a rejection from the whole monthly breaker block. That makes it a giant pool of sales out liquidity. Anchor point. The anchor point last created is a rejection from an old monthly breaker block that makes it a giant pool of sell time liquidity. Boom. Compression is on mapping. Just like compression. Now the price is expanding. High time frame anchor point assessment. Monthly highs not been tested to confirm bearishness from a monthly time frame perspective. Same with the cock dippers. War and politics are driving the market now. Companies' earnings are strong. So that means markets go up. It's SPY for the 3 years. Lock and dams. Can you grab this? And lock this. Make sure this is some interval. Yeah, there's no difference in this higher time frame chart than the actual SPY. SPX. Risk on, risk off. Let's just look at the dollar. Dollar's looking like it's flipping bullish. It's closing above. You can't really say it's basic because it is actually. That's a monthly time frame. You gotta respect it. We just closed above 2 monthly candles, but this could be the turnaround. See, let's look at Z. Very sideways. Hold up. Hold up. There we go. Those are sideways. A little too green and more bearish. Looks like we're letting risk off, really. So going into April, supposed to get a dip. Okay, let's see. I do want to see that chart for the midterms. Going into April, little pop drop, May, June. Midterms are generally flat going into Q2. I think with war weight, lean more to the downside until about and it ships go through safety. People not scared no more. It should be made because they like to do stuff when it's supposed to happen on time. They like to be on schedule with their events. Quarterly target. Go back to the spot. It's at $6.15. Where we at? That's $15. Yeah, I think we can hang out here until the war is over. But here first. Let's go here. What is that on SPX? Okay. My objectives right now. I don't think we go too far down. Even if we take that low, that rejection block, I expect to hold for 50% in that range. Let's look at QQQ. Price on should be good with quarterly objectives. Yeah. SPX 6,185. Okay, monthly page time. Alright, time to knock out the month. April stabilization attempts began late month. Better intraday structure, but still fragile. First sign of dear buyers returning. Watch for higher low behavior. Let structure confirm before sizing up. This is not the main bull yet, so I need 13 weeks. 13 weeks of days. Here. We bearish right now for sure. Narrative context. It's really Iran war. That's it. Headline driven market. Look like we're in a distribution. Correlated market. I kind of tried those already. Let me take a look at. See if I got the Russell on here or something. No, I don't think so. Nah. Yeah, I'll do the correlated markets on my thing now. Let's get this 13 weeks. Right here. Bearish over here as well. And I think we're distributing. Let's look at the SPY. 13 weeks. Right here. 13 weeks of days here. It's a chart link. bearish over here. Yeah, we don't need that. 6-8%. New theory of the model now. Focused on the basics. Focus on the basics. Define steady state ICT 2026. This new stuff is good too. Week 1. Didn't take that long to knock the month out. The quarterly open take a little bit longer than that. Okay. That's a full week. Week 1 NFP. Kind of feels good. Q2, week 1 NFP. NFP week protocol. Trade Monday through Wednesday. Take Thursday. Friday off. Just look at the COT. It's taking forever for them screenshots to load. I can be done. Okay, let's see. Where's the NASDAQ? Here we go. See, look. Take COT. Go here. Go here. See, this will probably load faster than. See if it loaded here. See, look, it still ain't load here. There you go. Raw positions. Non-commercials are net long. Why? Everybody else is short. Commercials are short. Per public space alone, market is vulnerable. Net active large specs are net short. On the surface, specs look bullish, but the active directional traders are actually short. This is not a clean trend setup. Commercials are short. Large specs, small traders are. Likely outcome, consolidation then break lower. No strong agreement across groups. Commercial lean against price. Specs not aggressively long. That makes sense. Nasdaq tends to rally, then become volatile and corrective. Watch for rally failures, gap up reversals. Oops. The oops trade. That's in his book, that long-term secrets to short-term success. Cool. Let's go back. Let's go get the SPY. S&P. Here it is. Okay. S&P 500. And while that's doing that, that really long thinking. See, it's cleaner. It's a more, and this is much cleaner and more important read than NASDAQ. Why? Because it's more volume probably. The open interest dropped a lot. They're net short, slightly net short, small traders alone. Very heavy short. This is not a continuation bearish. Potential reversal, short squeeze environment. Commercial net. They're basically fat. Oh, okay, commercials are not pressing shorts. Commercials stepping to the side. Large speculators are extremely low. Short and small traders are extremely low. This imbalance creates fuel for the upside move. Specs will need to cover shorts. That's what they said last week when we dropped. Keep that in mind. NASDAQ weak distribution, S&P. Okay, I had to just double check the dates because this is exactly what it said last time. Paste. Look at the Fed watch. No, it ain't no change. They not pricing in no rate cuts to like Q3. 97% no change. What is this? The 29th of April. It's a greater chance of a hike than it is for an ease. That's kind of cute. No change. Greater chance for a rate hike. 2% and a rate cut. 0%. Let's see what's up with the earnings. Nike Beyond Meat. This ain't nothing. Yeah, that's it. So just right here, that's good enough because we don't even know who y'all are. Okay, it's gonna be doing this every time I paste anything. This is super. The bearishness actually cut down. That could be the commercial stepping aside, more cash on the side, and more people are leaning bullish. Boom. Okay. I let that load. And close these. No top sentiment. Um, no bearishness. Bearish sentiment went down a tad. Cash on side went up. People waiting for war or reliable war news. Can't trade the war news. That's unreliable. Nine weeks of days for NASDAQ. Here we go, 9. Here. This is the 9. Okay. Oh, we at big discount from the 9-week look back perspective. Any turnaround here would just be a retracement or order parent. Anchor point interaction. No solid anchor point. Price just been sideways. Then it dropped. It's toward the price alignment. For what is it good for? Let's look at the spot. It's 500. Basically got the same thing here. Just straight down. NASDAQ. Gauging. Let's look at the spot. Nine. Yeah. Actually look at this one a little bit more. Plan on engaging. Boom. Skill focus. Basics. Shot selection. Journaling. Journal intent. Understand on top. And building out my Notion and Tradezilla. Case study hunt plan. At the moment, Tradezilla is a word, but I'm not gonna go there. Going day trade. I just risked here. No, you're right. Yeah, the VIX is too high. High VIX. War environment. High ATR. Playing strike day. Tuesday. Wednesday is that ADP. It could give us a good one. ADP. Numbers seem to be closer to the real thing. Could provide anchor point for the week. All right. That first quarter, or that quarter opening, monthly open, it's a lot of journaling, but the work is done. Let's do the title. This is week 1. April or March 30 to April 3rd. All right, we in the game. All right, that's that on that. Y'all have a good day. Peace.